Hello and welcome. In this video, you will learn how to create a trading strategy using two moving averages and the Stochastic Momentum Index indicator. We will show you how to use these indicators and how to implement this strategy step by step. Now, before we start with the strategy, let's get to know the indicators we will be using a little bit. Before we begin, please don't forget to subscribe and hit the like button. Now let's learn the rules of our strategy. Let's take a look at an example of a long position. The Stochastic Momentum Index indicator crossed above its lower line. Let's mark this first. Secondly, we should wait for the price to trade above both moving average lines. As you can see, the last green candlestick has also crossed above the white moving average line. We will open a trade at the closing level of this candlestick and place the stop loss level below the 200 parameter moving average line. Our initial target will be at a 1 to 1.5 risk-reward level. I will show you a very different and effective method for a higher profit target. Please watch carefully. Yes, we have reached the 1 to 1.5 ratio. We took partial profits and moved the stop loss level to the entry point, reducing the risk to 0. Now, I will show you a different method for a higher profit target. Our focus should now be on the Stochastic Momentum Index indicator. We will definitely close the trade when the stochastic line crosses below the 0 level and then crosses above the upper line again. Let's see an example. Let's look at another example. The Stochastic Momentum Index indicator crossed above its lower line. A green candlestick crossed above both moving average lines. But since it was a low volume candlestick, this time I will try a more cautious trade and draw a resistance line at the top of this candlestick. If this line is broken, I will enter a trade. The resistance line was broken, and once again our initial target will be a 1 to 1.5 ratio. Afterwards, we will apply the strategy we used in the previous example for higher profits. Now let's look at an example of a short position. But this time, I will try an aggressive entry. As you can see, the stochastic is falling from the overbought zone, but the white moving average line has not crossed below the 200-period moving average line yet. Nevertheless, I am still waiting for a short position. The price is trading below both moving average lines and has also made a pullback. However, I am still waiting for confirmation of the downtrend by drawing a support line. And the stochastic line crossed above the zero line too early. If it also crosses above the lower line, I will have to close the trade. Yes, as I anticipated, the stochastic line entered the oversold zone. I have to close the entire trade with a small profit. Let's quickly look at the final example, France. If this strategy seemed a bit complicated, I recommend rewatching the video. In reality, it is a simple and highly profitable strategy that will especially protect you during sideways market conditions.